You can go with the flow when it comes to investing, continue to deal with the income outage of bonds, or discover the power of dividends with higher-yielding sectors of the S&P 500. Like utilities, XLU can transmit the benefits of equity income to your portfolio. With liquidity, all-day tradability, and transparency. Ready to plug into a different source for income? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully. Visit us at sectorspiders.com.
Pop quiz for viewers. What's Warren Buffett's favorite asset class besides stocks? I'm DeLegge with ETFguide. Welcome to another episode of Marketplace Minute. Well, here's a major hint. Over the past year, Buffett's Berkshire Hathaway has amassed $55 billion, and its year-over-year cash stockpile is up more than 50%. While Buffett isn't a market timer by definition, it's hardly coincidental that his best investment payoffs were made possible because of cash on hand. See his $5 billion deal with Goldman Sachs in 2008 as just one example of many. The fact that Buffett, the greatest investor of our generation, is once again increasing his cash exposure rather than equity exposure is quite notable. Buffett's understanding of cash inside an investment portfolio and the financial flexibility and stability it offers is quite clear. Now, contrast Buffett's current approach with the disdain, the hatred for cash and for money market funds and cash equivalents among the investing public. True to form, the investing masses have been doing the exact opposite of Buffett. In its July survey, the American Association of Individual Investors found that retail investors reduced their cash in their portfolio to a 14-year low of 15.8%. Likewise, this same behavior is being witnessed among mutual fund investors. Fund investors, for example, their asset mix in money market or cash funds is at record lows near 18.3%, while ownership of stocks and bonds are out in front. That's according to Ned Davis research. Contrary to popular views, cash has held up during both inflationary and deflationary cycles. For example, during the 1970s era of inflation, cash performed slightly worse than stocks, but better than bonds. And during Japan's deflationary spiral that began in the early 1990s, cash performed better than stocks. So aside from cushioning a portfolio against higher market volatility, cash affords you the ability to make opportunistic investments when asset prices go down or go on sale. In contrast, the fully invested investor is never afforded such conveniences. Sentiment extremes like the consensus hatred for cash is a contrarian signal and a warning sign of an overheated stock market. Be ready for what comes next. I'm DeLegge. Thanks for watching another episode of Marketplace Minute. Check out my latest report at etfguide.com.